Hi students. So in the previous video we have discussed how to prepare an income and expenditure account with this question now showing here. So in this question it is mentioned that how to prepare the income and expenditure account and balance sheet. So income and expenditure account and balance sheet we had to prepare, and from that we have prepared the income and expenditure account in the previous video. Now we are going to see how to prepare the balance sheet. I hope the same question is there with you. If not, you can pause this video and can write down this question once again. Okay. So we are going to prepare a balance sheet. First of all, we have to write the whose book it is. In the books of Medicure Society, balance sheet asset or balance sheet as on 31st March 2020. Liabilities amount, assets amount. Okay. Now we have to write each item of assets and liabilities. First of all, we are going to write capital fund. Capital fund, this amount we have written here. But do you know how to prepare that capital fund or how to find out that capital fund? Capital fund means the opening capital fund of the business or of this organization. On opening date, how much was the total capital fund? So in order to find out that capital fund, we have to prepare an opening statement of affairs or opening balance sheet. Opening balance sheet we are preparing here. Opening balance sheet in the books of Medicure Society, balance sheet as on 31st March 2019, liability amount, assets amount. It will be prepared as a working note. So you can write the heading working note. Under that we prepare the balance sheet. And opening value of each items of assets are writing. We know that opening balance of cash in hand is there here, cash in hand, cash at bank, then equipment, building. So these items are there, and opening outstanding of subscription is there, and opening subscription received in advance also is there. So income outstanding on opening date is an asset, we know. Income received in advance is a liability. Income outstanding is an asset, income received in advance is a liability. Like that, expense paid in advance is an asset and expense outstanding is a liability. Okay. So with that information we are preparing the opening balance sheet. First we will write, first building is written, then its amount 4 lakh opening balance, then next equipment 2 lakh 10,000, then next opening stock of medicine, opening stock is written, that means stock of medicine is written, then subscription outstanding on opening date is written 5,000, and next 7% investment. So 7% investment, 7% investment, is there anywhere given that 7% investment? It is not at all given. Okay, but interest on investment at the rate of 7% per annum is there, given 70,000. With that information we are going to find out investment. See, investment at the beginning we are going to calculate like this. Interest is 77%. That 7% is given 70,000. Okay. So if 7%, that means out of 100, 7 is 70,000. Then what is 100? That is the value of investment now. So value of investment is 70,000. If it is 7, what is 100? That means 70,000 divided by 7 into 100. So 10 lakh is the investment, value of investment. It is nowhere mentioned that it is purchased during the year. So we can assume that it was there from the beginning of the year. So 10 lakh is written there. Okay, then opening balance of cash in hand and opening balance of cash at bank. Okay, then we have to write on the liability side, subscription received in advance was their opening date, that we will write. Then next, creditors for stationery, opening outstanding to creditors, outstanding expense on opening date. So that we have written. So from here you can see that asset side the value is more. How much? 17,85,000, that we have written on the liability side, then deducted from this 90,000. So we will get the balance here 16,95,000, that is the amount of capital fund. In bracket, for understanding purpose, you can write balancing figure. This 16,95,000 we are taking here as the capital fund. Is it clear? Okay. So if capital fund is not given directly, we have to find out the capital fund by preparing the opening balance sheet. So from this opening capital fund, we have to add donation. Specific donation will be added, or specific grant, if it is there, that can be added. Here specific donation is there for medical camp, that will be added here. So total is 17,95,000, that is written. Then this is the capital fund plus donation. From that, if it is surplus, it will be added. But unfortunately, this for this institution this year we have got deficit or loss, we have got 55,000, that is deducted, and remaining is shown in the outer column. Understood? The same way, adding the profit and deducting the loss we have done in the case of sole proprietorship business. Final accounts of sole proprietorship business we have done. Same way we will do that, provided one difference is there, that if there is any special donation, that will be added to capital fund. Then next, outstanding or prepaid income or income received in advance. Closing advance of subscription is there. How much? 5,000 is there, that we have written here. Then creditors for machine, that means closing outstanding expense. Closing advance of income is written, like that closing outstanding expense is written, 1,20,000. Okay. Then one fund is there, we have a fund where it is related to polio, government grant is there on polio eradication, that we have to write polio eradication fund 70,000. So that 70,000 is written. Then from that polio medicine purchase, from that fund only we have to purchase that medicine, because for polio eradication separate fund is created. If there is any expense related to that fund, that expense will be deducted from that fund, and if there is any income related to that fund, it will be added to that. Is it clear? So polio medicine purchase is deducted, and 20,000 is the amount outer column. So these are the items on the liability side. Then let us see on the asset side. Building opening balance is written. How much is the depreciation? 20,000 is the depreciation. Remaining is shown outer column, 3,80,000. Then like that, equipments 2,10,000 minus, in that purchase is there, that purchase will be added. Then total amount 3,60,000. From that total amount we will deduct depreciation 60,000, and the remaining will be shown outer column, 3 lakh. Then next, closing stock of medicine. How much? 1,50,000. The next, investment, 7% investment we have calculated here. That 7% investment at 10 lakh we have written. The next, subscription due, that means income outstanding on closing date, 10,000 is written. Then closing cash balance and bank balance you can find as the closing balance of receipt and payment account. So 15,000 and 30,000. So both sides should be equal. Liability side equal 18,85,000 and asset side also will have to get the same answer. So that is the end. This is the way of preparing income and expenditure account and balance sheet. So you can solve maximum questions from your reference book, and if there is any doubt you can contact me. We will clear the doubt. Thank you everyone.